What's up, guys? Thank you all for tuning in to this video. So for all of you guys watching, or if you're following me on Twitter, I'll go ahead and link that right here. Then you guys have seen me posting about this video coming up. So anybody watching, if you're wondering how you can make $1 million in under 1 year with trading stocks, then this video is for you. So today I have a special guest back on the channel for us, Mr. Hugh Henne. He is back in full force, and he's already made over $1 million this year, and it's only June. So we're going to go over some of our favorite strategies, tips, and some methods that can really help you guys to get your trading accounts to that level as well. But before we get into that, make sure that you guys hit the like button and subscribe to the channel if you're getting a lot of value from this, because that really helps the algorithm and it helps us get to that next level to reach more people to keep putting out quality videos for you guys. So make sure to stay tuned, and here we go. All right, what's up, guys? So as promised, we are back with this week's video, and we do have a returning guest, which this is somebody that you are all aware of. He's been on the channel before, Mr. Hugh Henne, and we're having him back on the channel today because he has actually crossed in 2020 alone $1 million in trading profit so far. And we are at, as of the date we are recording this, it is June 13th. He has made over $1 million. So I wanted to bring him back on the show for you guys this week so he can talk a little bit about the process, like some of the mindset stuff and the strategy that goes into making $1 million per year trading. I'm only halfway through. So without further ado, here's Hugh.
Thanks, bro. Yeah. This year has definitely been absolutely insane. But one of the things that I think, we'll lead into right away is, and that you and I always talk about, is that it just has to be numbers. Like if you, like it's a great accomplishment, and it's something, that I'll always strive for, and that like, it's a huge accomplishment. I don't want to take anything away from that. Humble brag. No, I'm just kidding. But it's a huge accomplishment. But at the end of the day, it has to be numbers, because if you look at 1 million, you say, I reached my goal, let's go.
Yep.
Then you'll never get to that 5, to that 10. And I'm sure you're the same way with that. When you were starting at 500 and you got to 5,000, I mean, that's a huge return, but if you didn't look at that 5,000 as, just a return and just numbers, then you wouldn't be at where you are today.
Right. Yeah, man, you
so
really,
I think that's huge.
Yeah.
Yeah.
$1 million, that is a lot of money. I mean, no matter how you look at it, I mean, $1 million is an insane amount of money, but at the end of the day, you have to just make sure it's numbers on a screen, Don't worry so much about, hey, I just made ever how many thousand from this or 100,000 from this. It's just, did you execute the trade properly? I know one of my main mentors that I've had through my trading journey is Brad Mullins. And, a lot of times he'll make $10,000, $12,000 on a trade and still like be somewhat disappointed, because he's like, it's not about how much money, it's like, did I execute the trade properly? And, that's what it comes down to, not the dollar amount, because I mean, that will just keep adding up. It's just, am I consistently executing these trades properly, thinking about the chart and the trade and not the dollar amount?
Yeah. And I think, I was talking to, William Hunting on Twitter. He's one of my best friends, from home. And we were talking about, because I plateaued a little bit about around the 700 mark. And we went back to it. I was looking at my trades, and I was consistently making a good amount of profit, but the issue was the percentage wise. I wasn't, I had upped my starters, but I hadn't upped them to the point to where it was making a difference in my account. And my overall account was going up by like maybe 2% on the week, where in the previous weeks it was, and that's a huge, that's hard to, to keep up with. But in the previous weeks, I was doing like 20%, 30% a week. And that's, that's almost an impossible number, once your account gets to a certain point. But it was the fact that I was doing like 2% in a week, and I was really plateauing around that 700 mark. So when we reevaluated my portfolio, that's when we realized that I wasn't stepping up the starters, and that's what really,
Yeah.
in the last 4 weeks, I think I'm up 573 or 583 in the last three to 4 weeks, and so that really took me to a different level.
Yeah, and you're talking about 583,000, correct?
Yeah. In the
Just to
last 3
clarify.
weeks, 3.5 weeks.
Yeah, just so we can, because I mean that's some big numbers, man. We got to make sure to clarify that.
Yeah.
Yeah, I mean that's important as well. I mean, it's the only difference between making $10,000, $100,000, or $1,000,000 is a sizing issue. If you can make $10,000 from whatever you start with, like 1,500 or whatever you start with, if you can make $10,000 consistently doing that, then you can make $1,000,000. It just comes to the sizing issue. As your account gets bigger, then like you said, you want to make sure that your starters are getting bigger. And then,
Yeah.
as you see which way the trade is going to end up going, then you add more size into it, and just start taking bigger share sizes to get those percents in correlation with the dollar amount.
Yeah, exactly. And I think, one thing that all of us talk about a lot are, it's good in the beginning to structure,
Mm-hmm.
to have a structure that, like, it's going to be 10% of your account. That's going to be this. But something that was really hard, and I talked to Zach about this a lot, is that, it's kind of like a gas and the pedal. If you're driving stick, not every road at 75 feet do you go into gear 3. It's kind of like, you kind of get like a little bit of a feeling, so that if you know that a stock like like DSS is now
Yeah.
a super small float, I'm not going to throw 10% of an account at that,
No.
knowing, what the liquidity is. But something like, BIOC, or what's another one out there, or Rumble,
Yeah.
Rumble's a perfect example. Before the split, you could, the liquidity was there. After the split, that's when you have to resize, and you have to say, okay, if I throw 10% of the account at it, or, if I throw what I want my starter to be, then I'm going to be way over the volume average of the day. I'm going to be way over the liquidity. And that's where, a good trader evolves from, okay, this is, when I was starting out, I would do 10%, and I would do, cut profits at this percent. And then that's when you get into more of like that gas and that break, you kind of start to get a feeling for it.
Exactly. And that's exactly why I'm a proponent of advising anyone to start kind of small. I know a lot of times I'll have people messaging me on Twitter or in my personal life or wherever, never traded for more than a month, maybe. And, they're saying, hey, I have, $20,000 like saved up, I want to throw into a trading account or something like that. Do you think that's a good amount? And I'm like, yeah, I would dial it back a little bit, because what you really need to do, I don't care how much money you have. I don't care if you have millions just sitting around. I mean, when you're first starting, you're going to lose a lot of money. I mean, because you have no idea how to trade. So that's why, for me, I think it's so good to start small while you're learning. And then as your account is growing and getting bigger, you're going to be learning the game and evolving as a trader. So when you get more size in your account, you're going to actually know how to trade it. The risk management's going to be there. The emotional control is going to be there. And the market knowledge is going to be there.
Yeah.
If you have a 20,000 or 25,000, whatever, dollar account that you have grown from $500, as opposed to just throwing $25,000 right off the gate in there, you're going to be way more equipped to make a lot of money if you've already grown to that amount. So that's why I recommend people, paying that market tuition and sizing up.
Yeah. We, again, beer money, because it is way harder to grow an account underneath PDT from 500 to 1,500, or, even, whatever it is, but you learn so much, which is why a lot of people hate the PDT rule. I'm a huge proponent of it. I think that there should be more than 3 day trades, but as far as what it does for your trading, I think it should be that every new trader has to go through some kind of PDT, training, if you will, because it makes you a good trader no matter what you say. Because if you just throw 25 in an account and you just start throwing crap around and you're like taking profits on momentums and you're throwing the account and then taking profit at 10%, one, you're probably screwing the stock for some people. Because if you just market buying, waiting for it to go up 10% and market selling, one, you're probably getting right back down to your average. Two, you're completely screwing the momentum. And three, that's not trading.
That's not trading. That's just clicking buttons and gambling, hoping for the best. Which, a lot of people think that's what trading is, man. Like, I don't know whether it's, a lot of the new traders have come in during the coronavirus craze or what it is. But, I mean, a lot of people think you just sit here, click buttons, boom, and make thousands. Which, I mean, I guess, when you know what you're doing, that is exactly what you do. But there's a lot behind the scenes that goes into it before that point. So I want to ask you a little bit about risk management because, you're trading with a really big account right now and you need to have solid risk management on that. So when you're in a swing trade or when you're in a day trade, whatever that might be, how are you managing the risk on size like that?
Yeah. So, and this I completely accredit to Zach, PJ, and Incredible Bob. Before I really met them, I was making good gains, but this is what my account looked like.
Yeah.
This is what my account looked like. You know what I mean? So like I always did well, but my risk management was way off. My sizing was off. And I think again, it goes back to that, braking gas pedal. Like, sometimes you need to really, sometimes you just know, and you got to press it. And then there's sometimes when, again, rumble after reverse split where you need to, maybe break off a little bit. So, one is don't fall in love with a stock. I used to listen, you got to know when to trust your DD and just know that, something's not working, I mean, yeah, it's busted, and it's not even that the stock isn't going to run. It's just, if you wait too long for the stock to run, you're losing out on opportunity costs. A lot of guys that we talk to, you guys have small accounts, but then you're throwing 80% in your account with something that is sideways action for 7 months. What does that do for your account? We all take loss. First off, don't fall in love with a stock. We all take losses. Don't have a glass chin. That's like the best I can tell you. You play with fire, you're bound to get burned. Our stocks moved 40%. DMPI, perfect example. We got in at 97 cents. Okay, it grinded up to about the 99 mark, and it was chilling there for a little bit, and it got merger news, and it flew up to 197. By market's day end, because of all the people taking profit, it ended down on the day. Now, you know what I mean? If Google bought a company, bought like a mid cap, it would skyrocket and it would stay there. But there's just not enough liquidity in stocks like DMPI where, if the first dominant, once the first dominant falls, it's over. So don't fall in love. Get in, get out, and move on. I can't even tell you. I took a huge loss this week and I can't even tell you what the ticker was. I can't, because you have to have a short-term memory and not fall in love and not have a glass chin.
Exactly. Yeah, man, you got to have a short-term memory with profit too. I mean, if you make a really big gain, then you can't let that go to your head either. You can't just get reckless and crazy and just, throw a lot of money right into the next play because you're coming off of that high. I know I'm a really big proponent of having a routine, whether that's your morning ritual, whether it's midday, whatever that might be. For me, I mean, I can speak a little bit to my routine. What I do every single morning is I wake up and I chug a Monster protein shake to get my protein going and get caffeinated so I can focus. And then, I'm trading pre-market, and then, usually around 10:30, like, fortunately these days now I'm up, usually a couple grand or something like that by around that time. And, I'm still at the point, me personally, man, like I just need to take a break or for a second. Like, okay, I'm doing really good today. I don't want to just get jaded and cloud my judgment. So what I do every morning, man, usually around 10:30 is I'm taking a Starbucks run. I'm just like, okay, I'm just going to take a second, stepping back from this market. I don't want to give back any profit. Let's just calm back down, get that coffee going again. I mean, I'm a caffeine addict first off, but gives me a chance to decompress a little bit, get my mind cleared back out, come back, sit down, look for another play, to maybe alert out or just find some more scalps to do. But it almost
Yeah.
resets me. Like, I
Yeah.
forget all about the gains that I've made. Like, okay, great, that was then. Now let's find the next one, not just get reckless off of that.
Yeah. Yeah.
So what's your routine? Like, what's it look like for you?
Yeah. So, I think the biggest thing is that, you have to want to wake up in the morning and trade. Like Saturdays and Sundays should be like, okay, like Saturdays and Sundays, I'll tell you right now, if the market was open 24/7, 7 days a week, I think you, me, Zach, PJ, I think we'd be dead by now because I don't think I get 4 hours of sleep during the week. But the thing is that even if I'm up till 3 a.m. doing schoolwork or doing research, 6:30 hits and it's boom. It is. So I'm up, I get my coffee, I sit down, I'm watching the news a little bit. I'm reading articles on some things that happen in large caps because I do dabble in large caps. And then I think that really, it gets to around 10:30, 11. And it's funny. I have a twin sister, and we are polar opposites.
Yeah.
She works. Yeah. Oh yeah. Yeah. I mean, dude, polar opposites. Yeah. And she works at Lowe's, and she there's nothing wrong with making $13 an hour, but some days I'm up, six figures, and I just give her a call, just to talk to her because there's only three things that she likes to talk about: her animals, my mom, and Lowe's. And
And
that's all she likes to talk about. And so, giving her a phone call and, just hearing, not the but how she looks at the world simplistically, definitely resets me and gets me, fired back up.
yeah. I mean, it's all perspective, man. And
Yeah.
that goes a little bit about how we talk about numbers on a screen, like you
Yeah.
can't think so much about like, oh, I just made X amount of money today. I mean, that's not what you look at. It's did I trade well today? Did I have a plan? Did I execute it? Did I adapt if need be? I know you were talking earlier, about I think DMPI that
Yeah.
97 and it hit like $1.80, $1.90 or something, and it came right back down. So these are things that we can't foresee. Like to be able to foresee something like that happening, we would literally have to be sitting here with crystal balls, being able to see anybody that might panic sell or anybody that
Yeah.
just wants to sell on the bid. I mean, we don't know what somebody's going to do before they do it. So that's why I always tell people, I mean, you got to adapt in every single trade
Yeah.
because what I try to do is, I look at the chart and I look at it how I'm seeing it at that time based on the volume that I'm reading and the levels on the chart. And I try to tell people what it should do based on those
Yep.
items right there. And, that's what I think that it should do. And a lot of times it does that. I mean, sometimes it goes even higher. Like just because I say, it'll do $2 doesn't mean that it can't hit $2. More volume rolls in and it does $3.
Yeah.
And which I love seeing that. Like even if I sell out of something, if it hits my price target and it keeps going higher and people are still in it, I love seeing that. Love seeing people making
Yeah.
more money from it. But
Yeah.
at the same time, I mean, I can't see if somebody's going to just completely bid sell something. I mean, that's things that we don't know, and that's why it's so important that you be watching and you have to adapt when those situations do occur.
You really do. I mean, again, I feel, like at least when I started out, and I'm sure when you started out and all the other guys, like, I was a fish out of the water and I had to learn on my own. I feel like now with Twitter and everything else going on, I do my best to, my second tweet is always a disclaimer. They have an S3, or this is a low float, please scale accordingly. I mean, Zach literally tweets out, this ticker, it's a low float, scale accordingly, and then he gives the ticker. Like I feel like we try and do our best, but it's up to everyone to again read it. Like originally I used my Twitter simply as a research Twitter, as so I can document my trades, so I can have it all in one spot. So I think that we really try our best to do what we can. UAVS, my original price target was, if it goes over 1, it'll hit 150. That was, if it hit 1, that was already going to be an 80%. If it hit 150, that was a 200% move.
Yeah.
It went to $5. But then, what's one that didn't hit? I can't even. Let me see. Oh, we had ACSD earlier this week. I said that my price target was 230. It hit 220. It was still 40% move, and I'm still, I'm still in it. And I had someone in my DMs like, hey man, like you said it would go to 230. And I said, yeah, I said it would go to 230 on news. It organically went to 220. Like I'm sorry, man. Like,
Yeah.
I'm still holding, So, UAVS went 590% more than what I had said that my price target was. ACST went, what is that, 6%?
Yeah.
Lower than what my original price target was. So I think that, and it's all based on the chart. Like I don't pull these. You and I and everyone else don't just pull these price targets out of thin air. They're completely based on the chart. So.
Yeah. So, man, I want to speak a little bit to people that might be watching this right now. I mean, because a lot of the people following us are newer traders. They have smaller accounts. And it's, the market can be really tough. I mean, This summer has been a really hot summer, fortunately. And, you got to trade it as such. I think you made a tweet about that. Like, I mean, yes, it is summer trading, but I mean, you got to trade it while it's hot, man. Get it while the getting's good.
Got to.
I mean, you said something similar to that, not that exact lingo. Maybe send that over and we'll throw that up. But if you are taking a loss right now, if even in this hot summer that we're having, you're losing money and you're getting a little bit frustrated, just do not give up, because I remember when I was first starting, I lost almost every single day. And I remember my very first green week, I think I made $50 on my very first green week. And I was more excited about that $50 than I have been about a lot of the profits that I've made, because I mean, I traded every single day, and I had made it to the end of the week trading every single day in the green, and I had $50 and nobody could tell me nothing. I was so what I would just stress to you guys, I mean, do not stop. And definitely study charts. I mean, you guys need to keep studying those charts to see how things move. Go back and watch the movers of the day. Go back and watch those runners, study that chart, kind of see how they acted. And I'm sure what you're going to find is, well, first off, the movers that we trade high volume plays. So watch that volume, watch and see how, it makes the chart move up. And I guarantee you're going to see that it either comes to a resistance level and it kind of stalls out right there and then comes down, which if that's the case, that resistance level would have been a first price target. Or what you're going to see is it comes to that resistance level and it just breaks through it, and then it goes as high as it wants, and then it comes down. It's important that you guys understand that what goes up must eventually come down. And that's part of the game. And if you know that, you can really profit from it. You profit on the way up, hit your price targets, and bail. I mean, don't be caught riding it all the way back down. It's okay if, you're riding it up and then you hold through the pullbacks, which I do that almost every single day. I hold through the pullbacks. I even add more size on pullbacks, and then I catch the next
Yeah.
ride up. But don't confuse a pullback with a complete crash. It's pretty obvious to see, you know, when it is a crash as opposed to a pullback. If you have been sitting here for the last, I don't know, 30 minutes to an hour watching red candle after red candle just keep coming down, that's not a pullback anymore. You need to bail. But, you know, if it's only been 5, 10 minutes and it's kind of just dropped a little and consolidated, you're still fine.
Yep.
That's what I would tell people.
Yeah, I don't really, yeah, and I mean, you know, you use, you know, the indicators, and I don't use as many indicators, um, but we have the same strategy. You know, I draw my support and resistance, and if it breaks that, I'm out.
Yeah.
You know, even if it flies, if it, like, you know, like I said, UAVS, I got out at 210, WTRH, I got out like $2. You know, like each of those went to $4 or $5. You know, and I scalped it here and there. But my biggest thing used to be when I was you know, coming up in the ranks was, you know, I would take my profit, and then on a dip, I would load the boat again,
Yep.
and it would crash. And not only would I lose all my profit, but then I'm giving stuff back. I'm like, man, this is ridiculous. So until I really got consistent, I didn't even used to get back in. I used to take my profit, and I used to put that. I used to have an Excel that I wouldn't touch it for 2 months, no matter what. I wouldn't touch it for 2 months. So
Yeah.
I think that it's really important. You know, the FOMOs is insane. It'll kill you. It'll kill you.
It really will. But no, I think it's important that I think you talked earlier about the opportunity cost. That's
Yeah.
something that a lot of people don't realize, and this can really stall your account progress. So if you're
Yeah.
holding a trade with pretty much your entire account and it's a losing position and now you're a bag holder, you're just holding
Yeah.
that. Maybe, you know, the losses keep adding up a little bit and a little bit, but you're like, no, no, it's going to come back. I'm going to take a win from this. I know that's the mentality a lot of people have, is because they're in the trade, it will eventually come back. And
Yeah.
that's just not the case. Your judgment is clouded, and you're thinking about that very differently now than when you were thinking about it before you got in the trade. So
Yeah.
I would recommend, I mean, it's going to suck, but it's going to be so much better. Just go ahead, rip the Band-Aid off, take whatever
You got
loss
to.
you have right there, get into the next trade, make that loss back, and then, you know, just keep going from there. So you're not sitting on the sidelines, not making any money. Just accept the loss, rip the Band-Aid
Yeah.
off, get the money back. That's how you last in this game.
Yeah. Yeah. I tell my friends all the time, I feel like I have like a target right here, you know, but the thing is that, you know, as many times as I take it on the chin, it's so dumb I think it's so dumb that, you know, like I said, you set a plan, and if it breaks that, just get out. Because here's the thing is that if it breaks that, chances are it's going significantly lower. And then you get into, you know, the next day where the volume is like half of the average volume. Dude, like, come on. Like,
I
now
know.
you're just hoping and praying. I feel really bad because I'm sure you too, you know, I try and keep up my DMs and, like, you know, like, hey, what do you think about this? And I'm like, dude, I take a look, and I'm like, did you just get in? No, I got in at here, and it's 50% down. And I'm like,
I
dude,
know.
I can think of 5 trades alone in this past week that you could have made that money back,
Yeah,
at least.
I know.
I think at least.
Yeah, I'm with you, man. I mean, I'll get some DMs as well. People like message
Yeah.
me a play from months ago, and they're like, "Hey,
Hmm.
you still holding? Is it still looking good?" And I'm like, "Well, first off, I'm a trader, not an investor.
Yep.
Um, so that's important to distinguish that separation. I don't invest in these companies. I don't marry them. I trade the volume. So catalysts that are upcoming, and I trade volume. It's all very short term. I will
Yeah.
swing, but dude, if I'm swinging something for a week, that's a long time for me. I'll do a week
It's a long
swing,
time.
and then I'm out.
Yeah.
I don't hold anything for months.
Yeah.
So that's, you just got to rip the Band-Aid. I would really stress that.
You I literally don't think like if there's two things that are most important is one, like I said, don't fall in love.
Yep.
Okay, which these two both tie like I don't know how many times I'm going to say this throughout the video, but
Are you talking about
don't
stocks or
fall in
real life in general?
both baby. Come on. But don't fall in love and ties hand in hand with take it on the chin. Like we we all take it on the chin. Like
Yes.
there, I can't. I've never met a trader that hasn't taken it on the chin 1,000 times if they've been in the game for 3, 4, 5 years. That's just not a thing. That's not a thing.
Yeah.
We
So
pay market tuition.
your account, I mean, you've made already over $1 million this year. I would imagine you're trading with what, a few $100,000 size account.
Yeah, yeah,
You're trading with that. I mean, that's much bigger than mine. What I'm trading with, I trade with 30, and I pull profits each day. But even that, with those accounts, compared to a lot of the people that are following us, we still take losses, and
oh
our
yeah,
losses are going to be a lot bigger than some of these losses. I mean, and that's just part of the game. I mean, if you lose 1, 2 thousand on a trade, I mean, it sucks. Nobody wants to do that, but um, just take it on the chin, rip the Band-Aid off, forget about it. I mean,
yeah,
and I'm sure, I mean, me, like if I take a $2,000 loss, that's, I mean, it's not fun. I mean, but I can make it back. And yours, I'm sure, are going to be a lot bigger than that when you take a loss. So, I mean, it's just
yeah,
all perspective and all sizing.
yeah. And I think it's important. Something that I'll never forget is, and I have a poster not here, but in my other house, and it's a quote from Jeff Bezos. Okay, and he said, "I'll always take a big risk if I believe in the risk. But the important thing is not to risk the house."
Yeah.
So, I think it's important when I was growing my account, again, 50,000 is a lot to start with. I didn't start with that a few years ago, but even if you're starting with $5,000, you can take, okay, this is how I trade. I trade for maximum growth. So, you know, that might not be the style for everyone. I don't take usually I'm swinging. I don't usually take profits. Thursday was brutal for me.
Yeah.
Friday made up for it and some. This was my biggest week ever. So I think it's
Ever?
important that to know ever.
That's awesome, man.
Yeah, yeah. So this was my biggest week ever. And even though Thursday sucked, I felt like going all cash, and you just have to really suppress those emotions. And I think it's important that when I was growing, if you have a $5,000 account, you can make big bets, but don't make the bet because I or Zach or Gary or Bob say it.
Yes.
You have to be the one to say, okay, I like this stock. I know everything that I possibly can with, without breaking the law, I know everything humanly possible, and I'm going to make a bigger bet and throw 40% in my account.
Yeah.
I used to have a 10-step matrix. Okay. Who was I talking? PJ and I were talking about this. I used to have a 10-step matrix on Excel. And the first one of the year to hit the entire matrix was WTRH. It used to be a 10-step matrix. It used to be one, chance of an offering. It used to be business. How far out is the catalyst? And I used to, rank them based on that. It used to be 10 different matrices. And if it only hit 5 of the matrices, then I only put in 10% on my account. If it hit all of the matrices, I'll send the boat. I'll
Yeah.
send the boat, And I think that's important that you can bet big, but only when you're certain.
Yes. And that's important that you say that. I mean, there are some stocks that will pop up that it's going to meet every step on your matrix. It's going to meet all the criteria
Yep.
that you just know this is going to be a good trade. And that's when you
Yep.
really want to go all in. I mean, me,
Yep.
even at this point, like I sometimes struggle going all in like that. But there are those times that you need to go all in. And, more than
Yeah.
likely, if it meets your criteria, it's going to be a big payday for you. But let's just say that it doesn't. Let's just play the devil's advocate and say that it doesn't. It meets all your steps. Even if it doesn't, you're going to have that good risk management that you're going
Yep.
to adapt on the fly and when it hits your stop loss. Because even if it meets everything and you think it's going wherever it's going, it hits your stop loss, you're still out. You're not married to any stock, no matter what it hits. And
No.
that's a very important thing to understand. No matter if you have a stock mapped out and it's meeting everything, some things you just cannot foresee or predict. And if your stop loss is hit, you always, always obey that stop loss.
I'm telling you now, Gary, if your girlfriend gets mad at this, I guess I'm not coming to, I'm not coming over later. But I really do look at stocks. Like, I look at stocks, cars, and women all the same. Okay. And if this is, if I get, a nasty DM because of this, fine. But I've met plenty of girls that have met the requirements. Okay. But you're not going to marry her just because she, meets the surface. You got to really get into it and see, is she a morning person, or is she, a little spicy in the morning, if you will. You got to see, that she, I mean, some girls, man, I mean, if she doesn't, you can't see if her armpits are shaved. Not that hairy armpits is a bad thing, all right, but that's not my thing.
Oh, it's not
so,
for me.
Yeah, that's not for me, And even though she hits every criteria, she got the hairy armpits, that's kind of a deal breaker right there. So, the same thing with stocks. It looks great, but sometimes, man, you get in, and then you see that the stock has hairy armpits.
Yep.
And guess what? You say, what? My bad. That's on me. That's on me. You're a great stock. Yeah, exactly. You're a great stock, great girl, but you're gonna hit the high road, baby.
Yeah, no, that's perfect. But that's exactly how you should look at it. I know, again, like this is not talking about my girlfriend, of course, but that's my disclaimer. There's two things that you don't chase, and that's stocks and that's girls. I mean, you just don't chase them. Because I mean, yeah, of course, like, you're going to meet a great girl eventually. Like, I have my girlfriend. But that doesn't mean that, I'm going to chase her around. Like, if she's trying to make it difficult for me to, like, get in the relationship, trying to make it, like, too hard, I'm not chasing and getting burned. You just got to, wait for it to come to you. Wait for that right opportunity to happen. Same way with trading. Like, no matter how great the stock looks, you don't want to chase it while it's up here at its top, like maybe while they're like 21 years old and like, like tip top shape, looking great. And you're chasing up here. Then like everything just goes like way south.
Dude, you can't be chasing, the girl that does the longest amount on the Stairmaster. It's like,
yeah,
it's like GNUS or IZEA. Yeah. You know what? Up here, when they're up 1,500%, hell yeah, you want to chase them. When she's on the Stairmaster after 3 years, yeah, you want to chase her. But that's not the one that you chase. The one that you chase, first day in the gym, okay? You want to chase that rumble that, you want to chase that rumble that's down 97% on the year, but has 400 million in revenue. That's the one that you chase, because when she gets her 1,500%, she gets her 3 years on the Stairmaster. Let me tell you.
You were in from the beginning.
In from the beginning, you pay, you're there. You're there.
Yes. Yeah, that's perfect. But anyway, man, I think, we've talked about a lot in this video, about your risk management, having a routine, making sure that you remember at the end of the day, this is just numbers on a screen. Your sizing as your account is getting bigger, your size share has to get bigger. Is there anything else that you would want to leave the people with that could really help them get their accounts on the right track, or maybe to that bigger level of 1 million?
Yeah. So again, nothing can ever beat you doing your own trades and you feeling confident about a trade and going, balls deep in a trade and it working out. There's no better feeling, because you put in the work and you got paid. That is the best feeling ever. Profits aside, that's the best feeling ever. So don't ever, just sit back and be like, Gary called it. I'm gonna load the boat, because then if it doesn't work out, guess what? It's not Gary. Gary's gonna take a hit, but he's not covering your loss. So I
Yeah.
think that that's huge. And then when you grow your account, you know, I think that, what I used to do was, as my account grew 20%, so would my starter. So when I got my account from 50 to 100, my starter went from, X amount to double that. And then, at a certain point, it gets to be more difficult. And again, once you start to have a little bit, again, I'll say it again, of that gas and that brake, like kind of knowing the personality of the stocks, because, right now, if I'm doing 20% of my account as a starter, that's ridiculous to throw in a low flow. That's,
Yeah.
but really most stocks, 99% stocks, that's ridiculous to throw into. But
Yeah, it is.
there are a few that they're the exception to. So, so what I used to do is, like I said, as your account grows, your starter grows. So your account, every week I would reevaluate. Okay, my account was up 10%, so is my starter. Because then you're not, because it's one thing, if you go from 50K to 100K, and then 100K you say, okay, I'm going to double my starter. Mentally, you're going to look at those numbers on the screen, and if you usually take a $500 loss, now that's $1,000 loss.
Yep.
But if you're doing 10% increments per week, that's just something, then now, you're going from $900 loss to $1,000 loss. But then on the flip side, $900 gain to $1,000 gain.
Exactly.
So I think that's huge. I mean, dude, you're a master at it. You started with $500, and now your account's at 25K. Like how do you think? How'd you do it? Because that's how I did it. But how'd you do it?
Yeah, man. Like I said, I did start at 500, and like I leave it at 30K right now, and I'm withdrawing every day to get it right back down to 30K. But yeah, it's about knowing sizing. Like especially when I was growing, I couldn't put $500 into this account and a couple hundred or to this trade and that trade. I would just pick the best quality trades, and I would go heavy into the quality trades that I legitimately thought looked good. There was solid research behind them, a catalyst, legitimate volume in them. And I would play those trades, and I would really try to maximize my percent gain from them. And yeah, it's just, I don't know, man. It's just a matter of what I did was I would play one or two stocks at a time with confidence, with really big size, and size appropriately, and have that risk management on task.
Yeah.
That's what worked for me, and nothing's changed at this point. I'm just doing more trades now because I mean, there's no PDT or anything like that. So it's still the same game plan that got me from $500 to 30,000. It's just now, there's bigger size, so the numbers on the screen are just bigger, and that's the only difference. You can't be
Yeah.
attached to money. Like I can't look at it as, oh my God, I'm such a better trader now. Like I'm making X amount versus, smaller X amount back in the day.
Yeah.
Like, of course you get better over time, but the process is always the same. And you just got to look at it. Am I executing the trade properly? Am I following my plan? Am I doing what I need to be doing? Not like, oh my God, look how much I made. You can't think about that.
Yeah. I think it's really important what you just touched on. I just made X amount, blah, blah, blah. We are in an extremely hot market, and we've been on a really good run. But just because I made $1 million doesn't mean that I'm going to go and spend $1 million, because guess what? We could go 2 months without, I said that if August is anywhere near how last year was, I'm going to take the month off. That is a month of no income.
Exactly.
We were talking about your apartment. We were talking about your new apartment. What's the issue that you ran into your apartment with?
So the issue with that apartment is, since I am self-employed, dude, like I think I'm legitimately going to have to, come sit beside of you, write a 5,000 page essay with a cover letter, go down to the clinic, get my blood type, send all of this information to them, because the issue is, I don't have an employer. I mean, it's just me. So that was like an issue at first. And then, they're like, well, how much do you make each month? And I'm like, I don't know. Like it's different every single month. So I mean, it's just an issue. I mean, it'll get worked around, but like you said, I mean,
Yeah.
1 month I could make, you know, ever how much money, and then in August I could make very little. So you got to
Yeah.
be prepared for that, and plan accordingly.
Yeah, exactly. And then, uh, something that we touched on last video, um, mentors. Mentors.
Yes.
There are so many great guys in Atlas. I mean, of course, everyone knows Zach, PJ, Incredible Bob. If you're a scalper, Rocket Catching Bob. Haggy hates social media. He stays off Twitter, but Haggy is a fantastic trader to watch on the trading floor. I mean, even some of the guys coming up. I mean, Kenny's really just starting out in the last like 2 years. Going serious. I mean, he's destroying trades. So
Yeah.
I think it's important to really have mentors, but mentors adapt and evolve.
Yeah, man. And somebody else that is just a killer in Atlas, I know I've talked about him, is Brad. Like with his charts,
Yep.
man.
Brad destroys. Yeah.
Yeah, like
Yeah.
he can read a chart like a wizard, and I know he posts a lot for you guys about the different indicators and what you're following and the levels on the chart. So if you guys really want to learn how to look at a chart, I mean he's a great dude that you can learn from. So, but yeah,
Yeah.
Atlas is loaded with killers, man. All of those guys. Um,
Yeah.
there's a lot that you can learn from them.
I mean, you got Paint on the option side. You got Prez. I mean, Brad has to Brad has to pull at least 3 stocks that just have beautiful bounces. I think he uses the 9 and the 50, and I think
Yes.
he posts them on Twitter. He's got to have 2 or 3 that bounce right off of that 9 or that 50 and just double from where he posts. I mean,
Yeah,
like
he
there's
kills
so
it
many different
constantly.
strategies.
Yeah,
Exactly. There's so many different strategies. And I think the great thing is that none of us trade alike. None of us.
yeah.
None of us. Like I don't trade like you and I don't. Even though we trade the same things, we don't exactly trade alike. Zach and I
Exactly.
don't trade alike. But the thing is, the one thing that we all have in common, we have a passion.
Yep.
I hate taking vacations. I hate. I love. Don't get me wrong. I love vacations, but my family's planning a vacation during the middle of the week. I'm like, I'm already dreading it.
This
So
coming week.
we all have a passion. Yeah,
Same.
yeah. We all have a passion. We all trade differently. Find your thing. You know what I mean? Like 50K to a million. That's great. I've had the wind at my back this year. We've all had the wind at our back this year. But you know, you've done 500 to 25K. Zach, Zach has done literally pennies to millions.
Millions, yeah.
PJ, yeah, millions. Incredible. Zach's intuition is insane. You got PJ. You got Duke who does options. Duke kills it in options. The SPY. I mean, the guy only trades SPY options, and he's made 4 times his salary this year. Four
That's
times.
crazy.
So I mean, it's awesome what those guys, Brad, PJ, and Zach have been able to build because we all trade differently, but we are all destroying it.
Yes. And that's the thing, man. Like you just gotta find what works for you. Like,
Yeah.
what I'm hoping is, people can learn a little bit from me, learn a little bit from you, and learn a little bit from those other traders. And, you make it your own strategy. Like you're never gonna be nobody's ever going to remember who was the best copycat. Copycats are never remembered. I mean, you learn from the people that are doing it really well, use them as your mentors, and take that and build it into your own strategy. And, be your own person, be your own trader. Of course, look to the mentors for guidance and advice and look at what they're doing, study that, and learn how to make it your own. And I think that's very important because you know, like the fake accounts that we've been having and all of that stuff. I mean, at the end of the day, there's only going to be one Gary Trade. There's only going to be one Hugh Henne. I mean, we can help people, man, but like what works for me completely, I mean, it might not work for someone else. So don't do 100% to the T what I'm doing because it might not work for you like it works for me. Same way with you. So that's
Yeah,
very important to understand. But yeah, man.
for sure.
Yeah, so um, I guess we'll leave it at that here this week, but we do appreciate you coming back on the channel and dropping some knowledge for us.
Thanks, brother. Always so much fun.
Yeah, we'll definitely have you back on soon, probably when you hit that 2 million mark this year.
Yeah, hopefully that'd be, yeah. But again, just numbers on the screen, baby. Just
Numbers on the screen, that's all it is. All
That's
right,
all it
guys.
is.
So thanks for tuning in and hanging out with us here today. We hope that you've been able to learn something from both of us. If you're not already, you can find us on Twitter. We'll put those links up right here on the screen so you guys can find us there. But if not, then we will be seeing you tomorrow. All right, guys. Thank you all so much for watching that video. I had a lot of fun with Hugh on the channel today, explaining some of our favorite strategies for you guys. If you guys are new to trading, or if you've been trading for a while and you're still looking for a new broker, then I would highly recommend Webull. It is the broker that I use to turn $500 into $25,000. So you can click the link down below, get a couple free stocks, and sign up for Webull. Also, if you're wondering still what are the tools that the professional traders are using to find all the movers each day, then I have a couple links below for you guys as well. Make sure to go ahead and sign up for Scanz to see what news is coming out at the fastest time possible, and also pick up trade ideas to see what has volume and what's moving each day. You really need these tools to set yourself up for success in the stock market. So anyway, guys, thanks for watching the video this week, and I will see you next Sunday.